Live, guys. So a couple of weeks ago, I'm sure some of you saw it. I put out a video talking about 4 stocks in my portfolio that I was wanting to sell out of, and I'm proud to announce that I officially pulled the trigger on one of those sales. We're going to be talking all about that in tonight's live stream. But before we get into that, welcome to another Dividend Happy Hour. I'm so stoked to be back, with you guys for another week. I hope you all had a great day. I hope you all had a great week. And why don't we kick it off with a quick cheers. So grab your cocktails, grab your leches, grab your energy drinks. I know some of you out there are drinking. Grab your Coca-Colas and let's raise a toast to another good week on the market. It wasn't as crazy as last week, but my portfolio continues to climb and reach all-time highs. So really don't have too much to complain about. And also here to you guys. Thank you for tuning in tonight. Real quick, guys, couple things here I want to ask you in the live chat or in the comments below if you're watching the replay. Number one, what did you buy this week? What did you add to your portfolio? I'm curious to hear what you picked up. Number two, what are you sipping on tonight for the Dividend Happy Hour? Personally, I'm drinking this like sparkling mineral water here that I got from Trader Joe's a couple days ago, excuse me, when I was on vacation. But also number three, are you celebrating any milestones in your portfolio tonight? Have you reached any new market value goals? Maybe you're at an all-time high in your portfolio. Maybe you crossed like the six-figure mark, or maybe you reached your first $10,000 in the portfolio, or any dividend income milestones, perhaps your first $100 month, your first 4-figure month, your biggest dividend payment ever, anything like that. I want to hear about it in the live chat. So let me know here in the live chat or in the comments below if you're watching the replay. And I just want to say what's up to everyone who's tuning in tonight. Looks like we got 70 people in the stream. And real quick, if you haven't done so already, if you enjoy the stream as we're going throughout things this next hour, it'd mean the world if you gave it a thumbs up. Just hit that thumbs up button for me one time. But anyway, I want to say what's up to you guys here in the chat. I see Chris is in the building. Congrats on hitting 40K subscribers. Thank you so much. I really appreciate that. It's cool little milestone, cool little milestone. And at the end of the day, I've talked about this before, but at the end of the day, and this is increasingly becoming more so the case as time goes on, subscriber count is kind of just a vanity metric. But at the same time, I do think it is at least slightly indicative of this community growing. And so for that reason, I'm stoked to see it. I'm stoked to hit that milestone, and I'm excited to continue to hit new benchmarks here on the channel. It's not possible without you guys, and that's not lost on me. So thank you so much. We got Lucas in the building. What's up, Lucas? I see Alberto, who thinks I sold Snap-on. Did Ryan sell Snap-on? I don't think so, my friend. We'll find out in just a moment what I sold tonight. Striper Kid, what's going on? We got Oliver, who says, I've been watching your channel and love your content. Thank you so much. I'm really happy to hear that. I'm still a new investor with 5K portfolio. Good job. So I'm glad to connect with you, man. I'm glad to connect with you as well. Thank you so much for tuning into the Dividend Happy Hour tonight. I really appreciate it. We got B still here. We got Mountain High. We got Kevin. Popcorn bits from previous viewing on his shirt. He sheds all metallic objects, including his belt. Oh, hello. So he could crawl through the doggy door so as not to trigger the metal detector. Ooh, very suspenseful. We got Anthony in the building coming all the way from New Zealand. Happy to see you tonight. Adon says, are you and wifey to be going to take 4 shots to celebrate your subscriber count hitting 4K? No, she keeps telling me, Ryan, let's take a shot. Since like 10 a.m. this morning, 9 a.m. even, she said, Ryan, let's take a shot. Ryan, let's take a shot. And she's doing all the celebrating. She's about 20 deep for the day. I'm just kidding. She's in the other room on the couch so she can hear me. But we got Charles here. What's going on, sunshine? Thanks, man. Happy to see you. Rui here. Good night from Portugal. Hey, Rui, what's going on? Charles, water check. Corona check. Dividend stocks, got a few, check. Love it. Who else we got here? We got Korean Cardboard. We got Ben Mallinson. Hello. Zal here. What's up, Zal? Hope you're doing well. We got a Wallet Invest coming all the way from the Windy City. Happy to see you. We got Mountain High here who picked up a lot of ABR this week, it looks like. We got Oliver who picked up some AbbVie. Okay. Korean Cardboard on the other side of the world, drinking a latte. I love me a good latte. Let's see. We got Mike loves the Philippines. It's been a good week. Wallet Invest buying some Pepsi shares on Monday. Interestingly enough, I actually didn't buy anything this week, guys. I was kind of slacking this week. The vacation kind of put me out of the loop, and since I've been home, I've kind of been playing catch up. So, I just really haven't bought anything. I'll actually touch on this a little bit later because it kind of ties into the topic of tonight's live stream. Alberto, nothing buying the cash or building cash, excuse me. Zal, also stacking cash. No noteworthy buys. Maybe not stacking cash, but nothing worth mentioning at least. Ooh, Tito's and Gatorade Zero. That is a classic. I remember being like right when I first turned 21. And yeah, right when I first turned 21, me and my friends, my roommates at the time, which were some of my best friends, we drank a lot of that combination right there. We had a name for it, which I won't share here, but it was not a polite name. I will just share that. We got Adon who's sipping some water, sold Jeppy and snagged my 300th share of SCHD. Now that is quite the milestone. Good job, my friend. We got let's see, Be Still Here purchased VU and SCHD this week, eating some leftovers. Good stuff. Now this is awesome. Zal reached $4,000 of annual dividend income this week. Bravo, my friend. That's a huge milestone. Good job. Charles got some SCHD for the kids, some J&J for the wife. We got Clayton picked up some Main Street and sipping a Coke Zero. Classic combination. Pat here, happy Thanksgiving, everyone. Yeah, happy Thanksgiving. I talked to a lot of you guys this morning in the morning stream, but in case I haven't seen you, happy Thanksgiving. I hope you guys had a good holiday. For those of you in the States who celebrated, hope you had some good food and had some good quality time with your family. But happy Thanksgiving. Picked up some realty income, and Main Street closing in on $19,000 per year in dividends. Holy cow, Pat. We should, I know we've talked about it before. We should think about trading portfolios, maybe, at least worth talking about. That's cool. Korean cardboard. I reached 20K this week in the portfolio, but that was mostly deposits. That's okay. It all counts. Oliver just reached 5K with an average of under 5% dividend yield. Okay. Good stuff. Let's see who else we got here. Mike buying SCHD, Realty Income, Coca-Cola, and American Express. Okay. Rob here. Hey, Ryan, I opened a position in EC this week. I had a bunch of drips heading out from Margs after this. Good stuff, man. Hope you enjoy those margaritas. Have one for me. Let's see. Wallet Invest, $218,000 portfolio. Holy cow. Good stuff. What else? Let's go through a couple more, guys. We'll get caught up in the chat, and we are going to get into the main event. For those of you who are just tuning in, it looks like there's 120 of us here in the stream right now. We're talking about a stock in my portfolio that I just sold out of earlier this week. It's one of the four. If you saw the video I put out a couple weeks ago talking about the few stocks that I was wanting to sell in my portfolio, this is one of those. So I'm starting to get to a point, and I'll touch more on this momentarily, but I'm starting to get to a point where like all these ones that I have on the chopping block, they're going to the guillotine in my portfolio. So this was one of them. We'll talk about it in just a sec. And why don't we just get into it real quick? I mean, let's just go through it. Then we'll hang out, go through some Q&A afterwards. But I want to hear in the live chat, like, which stock do you guys think I sold out of? Let me know in the live chat or in the comments below if you're watching the replay. Give me your best guess. Which stock do you think it was that I axed from the portfolio? I see Don here says, I think Ryan sold Jeppy like me. Ben also thinks Jeppy. Philly thinks I sold Walgreens, but I've never owned Walgreens in the portfolio. And real quick, I want to say what's up to Dominique. I see Dominique. We see Base, probably Base, not Bass. The Dividend Pro, King Damie. We got Kama, Tyler, Chuck. I just want to say what's up to you guys. Wilmer, Frank, good to see you. Haas, Philly said what's up. Logan. Yeah, I just wanted to just say what's up to those of you who I missed real quick. Z Pre, good to see you. Coyote, what's going on, man? Ghost Rider, happy to see all you guys. And we got Joyce. Of course we got Joyce. Thanks for tuning in, Joyce. So let me scroll down here, and I apologize for those of you who I missed. I see Journeyman. I see Rick, Benny, Michael, Tony. Okay, so here I'm at the part where you guys are guessing. So Striper Kid thinks Verizon. That's a good guess. That was one of the four. Okay, Tony thinks Jeppy, AT&T. Good guess. Adon, Jeppy. Lots of Jeppies, guys. These are all good guesses. I mean, you guys are you're on the right track. We see Intel. Let's see, Jeppy, WP Carey. That's an interesting one. Interesting guess. AT&T, Intel, AT&T, KRC. Yeah, Oliver's just kind of casting a wide net here. Verizon, Jeppy, or Intel. All good guesses. All good guesses. Like I said, you guys are all on the right track. You guys are all on the right track. And so I'm just going to, let's see, what does Al say? Maybe maybe I sold Procter and Gamble. Maybe I sold Johnson and Johnson. Just two of my biggest positions, just to, Why not? But anyway, I'll just show you guys. So drum roll, I sold out of here, let me actually do this. I've got my live stream set up over here too, so I can screen record here. I sold out of Jeppy, guys, or Intel. I saw so many Jeppies that my mind was playing tricks on me, but I sold Intel, guys. So as you can see, I had 63 shares. You can see that kind of in the middle of the screen. I sold Intel at a share price of $44.46. Now, let's go over to my dividend portfolio tracking spreadsheet real quick. So I want to dive into this a little bit deeper. And real quick, you can grab this spreadsheet. There's a link to grab it in the description if you want to check it out. It's free to download. It doesn't cost a thing. My love don't cost. My spreadsheet don't cost a thing. But anyway, this is a page that I just made today, actually. I'll be sure to include this in the next version of the spreadsheet. This is a sold positions page. So I figure I might as well start logging all the positions I sold. And I think these are all of them for the most part. I think I'm missing a couple, but my brokerage didn't have, the information wasn't going far back enough to get some of the other ones like Campbell's Soup. So there's a couple that are not on this list. But here's Intel, guys. So I sold on November 20th. Okay, so 4 days ago. I sold on Monday when I was driving to Newport Beach on vacation. I sold in the car. Okay. And let me know real quick too if there's a lag here at all, because sometimes when I screen record on my desktop, it doesn't work quite right. But anyway, like I said, 63 shares. My average cost was $44.29. So I sold just a little bit above my average cost. So if we look over here, guys, I mean, the market return, not great. $10.71. Total returns a bit better, just over $100, and percentages we're looking at 0.4% and 4% on a total return basis. So it's really not anything to write home about, unfortunately. But I do think if there is a bright side here, on the bright side, I at least did not break Warren Buffett's #1 rule of investing, which is to never lose money. And I also didn't break rule number 2, which is never forget rule number 1. So I guess that is the silver lining. But in addition to that, guys, with the transaction, let me just show you the cash position in my portfolio now, because it's quite a lot. And I'll talk about this a little bit more too, because it's a bit, I don't want to call it overwhelming, but it's interesting. So with this transaction, including my contributions for the week and the dividend payments that have come in total, I'm sitting on just under $3,100 of cash in my brokerage account right now that's ready to be deployed, ready to be reinvested back into the portfolio. And truth be told, one of the reasons that I didn't make any purchases this week is I guess I was feeling a little bit overwhelmed with this amount of cash. Like I didn't really know how to deploy it. It's something I didn't really think about before selling. And I think that's fine. I think it's okay to sell and then not immediately reinvest. I think it's okay to sit on a little bit of cash until I decide how best to redistribute it back into the portfolio. So that's where we're sitting right now. So that's why I didn't buy anything this week. And my plan with this, guys, truth be told, I still don't quite know. I'm not 100% sure yet how I'm going to reinvest this back in the portfolio. It's all going back in there. It's all going to go into stocks. And pretty soon, just, for full disclosure, I do plan on selling out of Jeppy soon. That one's next on the chopping block. That's the next one to go to the guillotine. And I'm also, if we go back over to my portfolio here, let's go here. Let me just show you my Jeppy position real quick so we can see what we're working with here. And I'm sure I'll do another video like this when I do sell out of Jeppy. But we can see right here, hopefully, let me zoom in actually, so that's a little bit bigger for you guys. So here's Jeppy. My market return, I'm down 9%, down $120. But on a total return basis, which is, really the more important metric, I'm up 6.4%. I'm up $85. So once again, if I sold come Monday, it'll be all right, in the words of Jimmy Buffett. Wow, I don't remember who Love Don't Cost a Thing. I don't remember who sings that, but we're making a lot of song references tonight. But and when I do decide to sell out of Jeppy, I will really be flush with cash. So from there, I should have about $4,300 in total to reinvest in the portfolio. And although I'm not 100% sure how I'm going to divvy all that up, and also just kind of a sidebar before I get too ahead of myself, I don't plan to sell Jeppy right away on Monday, but I do see myself selling out of it by the end of the year. I don't really know at this point why I'm waiting. I guess I just kind of want to think about more how to redistribute it. But in saying that, I I do have an idea of some of the stocks that that I want to reinvest in, and I'll show you those real quick. So going back over once again to the spreadsheet, here's some options. And once again, I don't know what I'm going to do. I don't know how I'm going to do it yet, but these are the stocks that I'm planning on reinvesting in. It could be one of them. It could be all of them. It could be just some of them. We'll see what happens. But these are the ones that I would not mind. So starting here at the top, EPD is one that I would not mind picking up some more shares of. I have 85 and a half shares right now. My average cost isn't too far below the current share price. I mean, maybe I guess it is actually 16%. So total return, I'm up about 36%. But nonetheless, I wouldn't mind getting this to an even 100 shares at least. And I'm at a point with my portfolio where there's not really, in my opinion, there's not too many options for things that I would want to to invest in that are down. I mean, I guess all the ones that I would average down on would be J&J. That's another contender for sure. This is already a huge position of mine. It's already 7.7% of my portfolio. But, I could throw some money into that. KRC is another one I wouldn't mind investing some into. I'm down quite a bit on this one. So really good opportunity to lower my average cost per share, bring my cost basis down. And it's not a huge position, 4.85% of the portfolio, but nonetheless, it is a, rather hefty portion of my total income, 7.3%. So that is something I'm trying to be mindful of. I don't want to get too out of whack in either department. But also, another one that I wouldn't mind adding more to is Lowe's. I'm not up that much with Lowe's, 2.35%. But once again, this is kind of starting to get up there in my portfolio, 6.8%, but there's still some wiggle room before it's, getting a little too out of hand, in my opinion. As long as it stays under about 10%, I'm good with that. And even so, I can be a little bit lenient on that. I'm not going to be a super big stickler about that. But Lowe's is another contender for sure. Main Street Capital Corporation, which is one I have not bought for a long time, is another one I'd consider, but I'm a little bit wary because I mean, it's kind of sitting at the top of its 52-week range right now. I guess there's not too much of a spread between the low and the high, over the 52-week period. But nonetheless, I'm up 6% in terms of share price. So that's not a huge gain. That's not too far above my average cost that I think it's, it's not like it's Chevron or anything where I'm up 55%. So I wouldn't mind adding at this point. We'll see if I do though. I might prefer to add a little bit more to Realty Income since I am still down a little bit on that one. But once again, kind of like with KRC, this is becoming a big position of mine. It's 7.4% of my total portfolio by weighting. But also, guys, look at this. It's almost 9% of my portfolio's total income. So it is starting to become definitely at the top end of where I'd like to see it. So I don't know how much more I'd want to add to Realty Income, but anyway, and I've been buying a lot of it over these last couple of months. I've really added a lot to this position. But anyway, moving on. Enough rambling on that one. Procter & Gamble, of course, is another one that I really like. I'm up 9% right now. That's not anything too crazy. And I'm trying to be better. I don't know if better about this is the right word, if the right way to phrase it, but you guys will get this. It's hard to want to add to positions that are above your average cost per share. You don't want to raise your average cost. You want to lower your average cost. So when I see something like Procter & Gamble, 9% above, I'm like, yeah, but WP Carey, which is the next one I was going to talk about, I'm down 11%. So should I add the Procter & Gamble, which I really love, 9% above my average cost, or should I add a WP Carey that I'm down 11% on? It's just kind of like just weighing the options there. But anyway, like I said, WP Carey is another one, or the other one rather, that I'm considering adding to. And this is probably one of the more likely candidates. I could see myself putting more into this one than some of these other ones that I've mentioned, because this is a really small position, only 4% of the portfolio. And I guess it is a decent size of the income, 6%, but still some wiggle room there. So those are all the different ways that I would consider, reallocating these funds. It's a lot of money, $4,300 when I do decide to sell JEPI. That's a lot of money to reinvest. And I likely won't do it all at one time. I can over time distribute that back into the portfolio. I can dollar cost average in over a period of weeks or probably over the course of a couple months or a few months. That probably would be the better way to do it. Another option, and one thing that I am considering, and I've talked about this before, I talked about it in my last video, is starting a small position in Rollins, ticker symbol ROL. And let's go back over to the screen real quick, because I want to pull up Rollins, because it's been a really fast mover this last month. And I kind of touched on this in the video, my last video where I was talking about it. But I don't know, the valuation, guys, it's got me a little bit spooked. It's $40 per share right now, and in the last month, it's up 20%. In the last 30 days, it's up 20%. Just this time, 30 days ago, it was 33 bucks a share, which still does look to be a bit high. And I was really like, ideally, I was hoping to get it somewhere about 30 bucks or below that. But so since it's moved up to $40 per share, I don't know what to do. And so, like I said, I've thought about starting a small position, maybe buying 10 shares, maybe buying 15 shares, something like that. Just call it like a starter position or something like that. And then seeing how it moves as time goes on. And if it goes lower, then really really pounce on it. But I don't know. This is a company that I really want to own. It's just a matter of valuation still. And I don't quite know what the right move is, but there's no rush to figure it out either. I don't think. But anyway, that's what's happening, guys. Sold out of Intel. You know, I'm glad I didn't lose money. I'm glad I didn't lose money, but at the same time, obviously, I could have made a lot more money with that money invested elsewhere. Sorry, I said the word money a lot. But anyway, overall, it was a good learning experience. If you guys want to hear some more thoughts on, I should have linked it in the description, but if you want to hear some more thoughts on why I decided to sell Intel, go check out the video on my channel. It's one of my recent ones titled like, I'm selling these 4 dividend stocks or something like that. Check that out. I cover my thoughts on why I'm selling Intel, just kind of share some of my reasoning behind that. And I'm happy if you guys have any specific questions, I'm happy to answer them here as well. But before we get to that, I want to put things back on you guys, and I want to ask you, what was the last stock you sold out of in your portfolio? Let me know which one it was, and if you feel so inclined, let me know why you decided to sell it. I'd be curious to know. But yeah, let me know what's going on there. Let me go back over to the chat. I might have missed some stuff in the chat here. Let's see. Okay. Talking about J-Lo, I see. Always good to have some gunpowder. Yep. Rest in peace, Jeppy. Sivnath says you don't have SEHD. I do have SEHD. I have it in my Roth IRA. So it's not in the portfolio I just showed you. But yeah, I do have SEHD. And I think at this point it's something like 6% of my overall portfolio. So SEHD is starting to become one of my bigger positions. And in time, like this time next year, SEHD will undoubtedly be my largest overall position. And I would not be surprised if it became more than like 10% of my overall portfolio. And over time, like that's just going to be how it goes. SEHD and VU, those are really the only ones I'm like actually dollar cost averaging into week in and week out. Those ones will just with time become my 2 largest positions. So, but it takes time to get there. So, let's see here. Let's keep going. Yeah. Okay. J-Lo. Thank you guys. Striper Kiss said, speaking of music, this goes to the convo. You've got to know when to hold them, know when to fold them. And, actually, I don't know if you caught that, Striper, but in the video where I was talking about the stocks I was going to sell, I think I referenced that song too. Fast Eddie, Ryan, you need to color code your lines. Color code your lines by buy, hold, and sell. What lines are you talking about? But because that's not a bad idea, but what are you talking about? Let's see. This is a good question here. Captain App Crash says, is the knock on Jeppy because the growth isn't there for the future? It's not a knock on Jeppy. Truth be told, it's lived up to whatever expectations I had for it. I just think I'm at a point where I'd rather have that money invested in a business, something that's a bit more tangible, at least for me, than a covered call ETF, which it's you're working with derivatives there. And so I'd rather work with something a bit more solid. It's maybe perhaps something a bit more straightforward than a covered call ETF. And as it pertains to Jeppy and the growth, I think it's a bit harder to predict because the growth, like, it's easier. I don't want to say easier, but it's different to analyze growth and predict growth from a certain holding, like Snap-on, for example. I can look at the how the earnings is trending. I can look at how sales is. I can look at the financial metrics and weigh whether or not I think this company will grow and be a solid grower for the next 5, 10, 15, 20 years. With Jeppy, it's just one of those things where I'm like, yeah, I'm holding it for the monthly income. And I'm just at a stage now where it's just I don't know. I want something more than that. And that's not it's not really a knock on Jeppy. It's just kind of become a personal preference. I don't need the monthly income right now, and I have plenty of other monthly income from other sources, from these other businesses that um I guess are more in alignment with what I'm looking for, if that makes sense. Let's see here. Let's keep going. Mm, let's see. Let's see. I want to get to where the last one you guys sold out of. So, okay. Haven't sold any Korean cardboard. I haven't sold any shares yet. Started in August. Kevin says you might consider turning the drip back on with Chevron since it's nearing the 52-week low. I'm actually talking about Chevron in this Sunday's video. I think for me personally, it's not one that I am in that big of a rush to add to, just because it's still 60 something percent above my average cost. But I do think if you're starting a position in Chevron right now, or if you have an average cost that's currently higher than mine, I think mine's like 94.5 bucks. I don't think it's a bad time to really consider starting a position in Chevron. But for me right now, I'm looking at these other ones that I have an opportunity to. Once again, it just kind of goes back to what I was saying with Procter and Gamble, which may be right or wrong, I don't quite know, but I think I'd rather put some more money into these other positions that I'm either down on or closer to breaking even on, besides bringing my average cost and diminishing my margin of safety with something like Chevron. Um, and if I want to add any more to some of the energy stocks in my portfolio, then EPD is a good one. I think EPD is a good one to add to. So, but yeah, I love Chevron. I don't. I At some point I'll add more Chevron. You know what I mean? I just maybe just weighing the opportunity cost. There might be better opportunity right now. So let's see. So Ron here says last one for me was AFRM. I don't think I'm familiar with that stock, but let's see. Ricardo sold Harley Davidson because he wanted Vici. Okay. Mario last stock was Paramount Global. Okay, nice. So Milito says I personally buy index ETFs, just 3 to 4 of them, never sold them. Okay, that's a good way to go. It keeps it simple for sure. Kama sold Texas Instruments. Oliver actually sold WP Carey. Yeah, okay, that's fair. And WP Carey is one of those that right now is very hit or miss with people. I know there's a lot of mixed sentiment towards WP Carey. Let's see. Dividend Pro, SCHD. I moved it from my brokerage to my Roth. That makes sense. Dominique, excellent move. Just wait and be patient. I keep 20% of my portfolio in a high yield savings account so I could take advantage of dips. Wait for lows. Wait for lows. Sales will be down next year. Look at fundamentals always, not just dollar cost average. Another thing kind of on this note, one thing I've considered doing with this cash in the meantime, while I'm waiting to reinvest it until I figure out what to do with it, is just putting it in like a money market fund within Schwab. Right now, I think there's one that's yielding like 5.2%. It's super liquid. So that's something I've considered doing, but at the same time, I think that would delay me reinvesting it back in the portfolio. So, but at the same time, like I feel like I'm kind of struggling with some of these positions. I don't know. I guess not. I mean, I've got some good options, right? Johnson and Johnson, WP Carey, Realty Income. Um, I think KRC. So I've got some good options of things I can average down on that, to Dominique's point, I think are still fundamentally strong. Let's see. Striper says Verizon and AMD are on deck for a sell-off. Yeah, Anthony says VOOV. 2 months ago because I learned about ETF overlap. Yeah, didn't need VOOV because I have VOO. There you go. Dividend Pro, I sold at a loss for tax credit. There you right on. Wilmer says I sold out of all my REITs and BDCs out of taxable to move them into the Roth. Robert says, I appreciate your thought process on selling the old and buying the new. I think we all face the same questions. I'm sure we do. That's the cool thing about being able to do this is because we're on the same journey. It's cool to share some of these thoughts that maybe a lot of us are thinking. So I appreciate you saying that. Rick says I sold out of Intel about 2 weeks ago. I was up over 9% and I wasn't as confident about the competitive advantage that they'll have going forward. Yeah. And another thing to keep in mind too, in selling, like over time, over this next year, over these next couple years, because I think Intel has been executing pretty decently on their turnaround, at least from what I can tell. At least from what I can tell. Could be wrong, but if they just continue executing as they have been, I wouldn't be surprised if it gets up eventually to 50, $55 or potentially even $60 at some point. At which point, I might look back and be like, dang, did I make the wrong decision? Should I have held on to Intel? But nah, no regrets. No regrets. And I might just have to get the tattoo to remind myself of that. Let's see. Tony says my test IIPR is up 3.7% from 10 days ago after your analysis video. It's riskier, has cannabis component ownership. Yeah. IIPR is a really interesting one. I think you might be referring to that REIT, ranking video, which if you guys haven't seen that, I basically ranked some real estate investment trusts from best to worst on some, very like surface level metrics. It wasn't anything too crazy. But across the board, performance, dividend stats, dividend yield, valuation, IIPR was overall the best performer. And actually, I think was ranked the highest, if I'm remembering correctly, which was very interesting to see. But yeah, it does have a bit more risk to it, which I think is something that keeps a lot of investors from owning it. But it's done very well. Let's see. Deslock sold out of Midcap Financial and bought 200 shares of SCHD. Wow. Nice. Good stuff. Let's see. Kama says, I love my individual stocks, but the way to go is SCHD and QQQ. It is a way to go. It is certainly a way to go, and not a bad way at that. Striper, I think he means color code your Excel sheet. Yeah. Oh, okay. So I probably could change the color on like the sold positions page to something else, but I don't think I need to. I don't know. Maybe I'll think about it. I get it. I don't have any issue keeping track of what's what. So that's all that matters to me. Alberto says sold Verizon with small 10% profit. Does not make sense for me to hold it since I'm only 30 and there are better deals out there. Let's see. Okay, Zpre, the last three I sold out of on the same day were 3M, Leggett & Platt, and Enbridge. I wasn't a fan of the stability on 3M or Leggett & Platt, and Enbridge just wasn't a meaningful part of the portfolio. Didn't make sense to have it. Yeah, I get you. Let's see. Viet Ta, what do you think of DGRO? I think it's a solid fund. It's be hypocritical to say JEPI is a good investment, but TSLY isn't. I don't know that I agree with that 100%, but I'd love to hear why you think that is. We can talk about it. I think they're different. I think there's some similarities, but I also think that they're quite different. But yeah, let me know why you think it's hypocritical. I'd be curious to know. I'd love to hear you elaborate on that. Let's see. Adon, I finally sold JEPI. I got into it because of the yield trap / no investment thesis. Then I was down, but after tallying up my dividends, I found I was up and wanted to put the money elsewhere. Let's see. Yeah, I see you guys talking about ads on the stream too. So starting this month, and you might have seen it on your end. Well, maybe not. If you make videos, if you put out videos, you'll definitely have seen it. But YouTube just updated how they show ads on videos, and something about that made it so they started putting ads in the middle of the live streams. Let me go look next time we do this, like on Monday for the walk to 100, I'll look and see if there's a way to turn that off. Because I don't want to, I don't want that to be too big of a nuisance. It definitely ruins the flow. So I'll look into that. But sorry for the trouble there. So this is a good question. So Ryan, what's your stock with the highest dividend growth CAGR? Was it Williams Sonoma? Let's go check it out real quick. So let's go over to Seeking Alpha real quick, which by the way, I'm sure you guys have heard from some of the other creators out there, but Seeking Alpha is running a pretty sweet Black Friday deal where you can get 30% off of the annual subscription. And I mean, you guys know, if you watch my videos, I'm using Seeking Alpha in pretty much everything. It's the one resource I think that has been most helpful for me as an investor. And I've learned a lot just from reading articles, and it's, super convenient to go through the financial statements on here. And this is how I listen to earnings calls and stuff like that. So if you've ever thought about getting Seeking Alpha Premium or trying it out, I think now is the time to do so. So you can get 30% off, but you can also do a 7-day free trial. So it's pretty much no risk to at least try it out. And if you don't like it, you can bail on it. But pretty sweet deal, I'd say. But anyway, to answer this question, my highest, and I forgot to mention, there's a link to it in the description of the video. But anyway, getting back to this, my highest dividend growth stock, at least looking at the 5-year CAGR, is going to be Lowe's with the 5-year dividend growth rate of 19.3%. Williams Sonoma's there in second, though, 15.7%, which is not too bad. And the 3-year dividend growth rate's even better. And let's actually look at this. So, yeah, Jeppy, interestingly enough, Jeppy's actually had some pretty solid dividend growth over the years. Overall, I mean, their dividend is a variable dividend, so it goes up and down on a monthly basis. But if we look at see if we can do this. No, where is it? I think if we go to the dividend growth page right here, look at this. So 2020, this is the annual dividend. So 2020 or 2019, 2020, 2021. They don't have it for, well, interesting. So 2020, 2021, and 2022. So we'll see what happens. We'll see what this year looks like. But so far, it's been a really, really solid dividend, growth from the fund. So that always surprises me. But anyway, yeah, those are my highest growth dividend stocks. And I could use some more dividend growth stocks. I talked about this in my last video, but I only have let's do this again. 1, 2, 3, 4, 5 stocks in the portfolio that have dividend growth rates above 10%. And really, I consider anything about 8% and above to be like higher growth. But I will say some of these are my larger positions. Lowe's is a large position of mine. Starbucks is definitely a large position of mine. This is my biggest position, actually. And just because of share price appreciation, Williams Sonoma has become one of my larger positions as well. It really ran up quick. I would have liked to pick up some more shares, and at some point would like to get the chance to. Same with Snap-on, same with AbbVie. AbbVie's kind of coming down, but Snap-on and Williams Sonoma have kind of got away from me. I'd love to add some more to these bad boys. But yeah, those are some of my highest growth dividend stocks. And Rollins, if I do decide to add that one, that's another high growth stock as well. Let's see. Let's keep going. See where we're at here. And it looks like I'm about 8 minutes behind in the chat. And real quick, I'm sorry, I mentioned this last week, but this whole, I'm using my laptop face, my laptop camera instead of my normal camera. I figured out what it was. I talked about it this morning, so I'm sorry if this is your second time hearing this, but with the latest Mac update, the update to their operating software, Sonoma, so Mac OS Sonoma 14.1, it messed it up. So like older, I don't want to say older, but webcams, or in my case, cameras with firmware that's not updated to the latest, to work with the latest Mac software, it basically makes it so, I can't use my camera for this sort of thing. I do have a workaround. I'm kind of waiting to see if Sony updates their software, their webcam software that goes with my camera, before I buy this little piece of equipment that's like $100 to fix the issue. So I'm just waiting to see if Sony will fix things on their end before I do. So I apologize if this is like, I know it's not it's a little bit more low quality, and but it works as long as it sounds good. You guys can see me. I guess it's not too bad, but I'd love to go back to using my camera. It honestly bothers me that it's not working. So, um, let's keep going. Mm, let's keep going. Yeah, just don't get no regrets tattooed instead. I know that was the joke. That was the joke. Cookie Monster, what's going on? Stopped in for some support, but I'll catch the replay. My milestone is my 40th birthday tonight. Happy birthday, my friend. Thanks for all you do. Thank you. I appreciate you tuning in and saying what's up, and I hope you have a fantastic birthday. Happy birthday. Um, let's keep going here. Let's see. This is a good question right here. So, what do you think is a reasonable valuation for J and J? I don't think it's bad right now. Speaking personally, my average cost is in the 160s. Right now, the share price is about 150, I believe, in the 150s. So I don't think that's too shabby. What do I like about the stock? What don't I like about the stock? I think there's a lot to like about the stock. I mean, the dividend growth or the dividend stats in general I call it like Goldilocks all around. The yield's fine, like 3.2%, mid payout ratio about 45%, a moderate growth rate about 6%, 61 years of dividend growth. So it's a very stable dividend king. And financially, it's a pretty strong company as well. Debt's in a good situation. They're still seeing moderate growth on the top and bottom line. At least I think. I actually haven't looked at their financial statements for a little bit, but let's do it right now while we're on the subject. Yeah, we're seeing some pretty decent growth. I mean, that's not too shabby. And if we scroll, I mean, highly profitable too. Like, look at this. What's the margins here? I think they may be expanding over time. No, about even or about the same. About upper 60% in the gross profit. Operating income, the operating margin's expanding a little bit, so that's good to see. Net income margin it's kind of all over the place, I'd say. I mean, 19%, 22, 22, 23, 1%, then back up all the way up to 35% in the trailing 12 months. So it's been we'll just call it about even. But overall, I think J&J is a pretty steady stock to own. It's one of those sleep well at night stocks. Looking at their debt situation, the net debt's not too bad. They only have, as of their last report, $6 billion of net debt on the balance sheet, which basically is their total debt minus their cash and equivalents. So not a whole lot of debt, and they are bringing in so much cash flow. So remember that number: $6 billion of net debt. Okay, just in the trailing 12 months, they brought in over $21 billion of free cash flow. So they could take a third of this free cash flow and knock out all of that debt if they wanted to. It's just financially, seems very secure. I would say the downside, I think pharmaceuticals can be kind of it's kind of a tough thing to wrap your head around, and it's something that I'm still trying to learn. So I would say that it could be a little bit more advanced in that regard, but otherwise, I think it's been a really historically great stock to own, and hopefully that answers your question. Um, yeah, this is a very well going back to TSLY and Jeppy. This you hit the nail on the head here, Zal. That's a good way to put it. They're alike in the same way that you and I are alike. We're both human, but have wildly different characteristics. TSLY and Jeppy, they're both ETFs. They're both covered call ETFs. They both, in some capacity, deploy a covered call strategy to generate income from that options premium that they, pass to shareholders on a monthly basis. But there's a lot more nuance between the two that's not similar. That's different. Like TSOY is, they're not even writing covered calls. They're synthetic covered calls. So it's like an extra level of complication to generate that income. And it only does so on one particular security, which in itself is a very volatile, company to own. Whereas Jeppy, it's long on some positions. It uses a different type of thing to do covered calls, these ELNs. So they do have their differences as well. Let's keep going. Let's see. Coding with Kenny. Hey Ryan, listen to your stream while at work. Heck yeah. Well, I hope you have a good day. I hope you're having a good day at work. I mean, Oh, this is nice. Robert said, ads on your videos are your income. We can absorb the inconvenience. I appreciate that. That's really nice. Um, let's see. Okay, so the Dividend Pro, look up UPS. Look up UPS. Since you asked, okay, yeah, you said please. Since you asked so nicely, I will look up UPS. And I'm talking about UPS a little bit in this Sunday's video as well. Um, obviously a very necessary company. I mean, UPS is a beast. I think also think it's a pretty good one to own. And I think year to date they're down quite a bit still. They're down not too bad actually, 13.25%. One thing that stuck out to me though is this yield. Like right now it's sitting at 4.3%. And really high dividend growth rate as well, 12 and a quarter. What's the yield at in relation to the 5-year average? So we're looking at about 36% above the 5-year average. So that's really good to see. Let's take a look through some of the financials real quick. Just a quick stroll. This is nice. Look at this growth from 55 billion in revenue 10 years ago to in the trailing 12 months, 93 billion. In the full year last year, 100 billion. So they've almost doubled their revenue in the last 10 years. Profit margin, let's see what's going on. I mean, you're definitely not going to get as high of a margin with UPS as you will with something like J&J, which is fine. Like they're different businesses, so you can't expect as high of margins with something like this than with J&J. So, but this is steady. 23 to 23. It's pretty much identical. But if we scroll down, looking at the operating income, looking at the operating margin, this is kind of I'd say pretty steady as well. I don't have any issues with this necessarily. Um, what do we see? Net income margin. Net income margin is about flat as well. On an absolute basis, it looks like they had a huge jump in net income these last couple of years, which makes sense, coming out of the pandemic, ordering things online, a lot more shipping going on. So no surprise to see that. And also if we scroll back up here, no surprise to see some more growth here in revenue. We can see their revenue really took off 2020, 2021, and then kind of started to level off again in 2022. So overall, I'd say the revenue growth isn't that great. I mean, I guess it's not too bad. I mean, 2013 to 2015, well, not necessarily. It's spotty. Let me just say that it's spotty, but 8% growth, near 8% growth, not too bad. So I don't know. I'd say it's fine. Looks okay. This is kind of interesting though. This payout ratio is really all over the place. And sometimes too, when I look at this, I don't know if it's an issue with seeking alpha and maybe their numbers are just off or if this is actually what it is. But if this is at all accurate, I'd say that's a bit concerning. 66% payout ratio, that in itself is a little bit higher than I think where we'd like to see it. A negative 89% payout ratio isn't great, but this would be because, let me change this back. Absolute. So where was I? Payout ratio. Okay, so no, this is way different. Excuse me. Those were the growth. I'm tripping. So that's not too bad. I mean, there was 1 year, 251% payout ratio, but that's because their earnings per share were so low. But let's go take a look at the balance sheet real quick. So, and once again, guys, this is a very quick scan of the financial statements. Pretty much just our sales and earnings growing. What's debt looking like? How's their levered free cash flow? It's kind of that. So, debt's kind of increasing over the last decade, going from on a net basis, 5.7 billion to 18 billion. Okay, but let's see how serviceable this is. So remember that number, $18 billion of net debt and $4 billion of free cash flow in the trailing 12 months. But prior to that, once again, 2021, 2022, really solid free cash flow years. So those are really strong years for UPS. So we'll see how it levels out, but this seems to be in line with what was going on 10 years ago, 44.5 billion, 5.1, almost 5.2. And it looks like they're paying out, at least with their free cash flow for the most part, they've been able to cover their dividends with the free cash flow. But you can see if we're using this levered free cash flow number, in the trailing 12 months, they are paying out more in dividends than they are generating in free cash flow, at least according to this metric right here. If we look at the cash from operations, so paid out $5.3 billion in dividends, Cash from operations looks a lot better. So 11.1 billion minus 5.6 billion in capex, and that will leave you with the free cash flow. So still, it still looks like they're pretty close in free cash flow to dividend payouts. But overall, from a long term perspective, I still don't think that's a reason to completely write off UPS. I think still a beast of a company, and I think we can all agree it's a pretty necessary one. That I don't know. I'm tripping over my words at this point. Let's just move on. Um, let's see. Let's keep going here. Uh, Yeah, can you so Charles says Peanut is in the house. I'm guessing you can hear him because you definitely can't see him. But yeah, he's been walking in and out of the office all for this last hour pretty much. He is a man about the house. He just got up from his nap, so he's got some energy to, and he hasn't gotten his steps in today. So his walk to 100 too. He's got to burn those calories. So Striper Kid, this is a really good question. Have you ever considered owning a growth stock or two just to propel you to more income? Case in point, Nvidia. I sold out and made a good profit that I poured into solid dividend stocks. Yeah, it's something I've considered. I'd be lying if I said that wasn't something I'd considered. And never say never. I don't want to be, you know, I love dividend stocks. It's my thing. You guys know that. And but at the same time, I don't want to be dogmatic about it for the rest of my life. If there's something that really piques my interest, and I just feel like it's a stock that I can't not have and it doesn't pay a dividend, then I wouldn't shy away from that just because it doesn't pay a dividend. But at the same time, I don't really have any plans to go out of my way to look at a stock that doesn't pay a dividend at this point. Um, I think about a company like Apple in my portfolio, and in my eyes, just that's as how do I say this? That is as good as owning a company that's doesn't pay a dividend. In my mind, it's kind of like the same thing. Like I get $1.59 from Apple every quarter in dividends. Like I'm clearly not owning it for the income. And so I think if I'm willing to own Apple in the portfolio, I probably at some point wouldn't, would maybe be okay if the right one came along owning a stock that just outright doesn't pay a dividend. But like I said, I'm not going to go out of my way to look for that. I love dividend stocks. It's always going to be my thing. It's always going to, it just, it just, it just suits me so good that I don't really want to do anything else, but at the same time, never say never. I see Kevin Burgess in the building. Good to see you, my friend. Hope you're doing well. This is a good question. Hey, Ryan, what's your opinion on the dividend stock IEP? Have you ever heard of it? If so, do you consider it a dividend/value trap considering the yield is over 20%? I don't like IEP. Let's go take a quick look at it. I talk about this one. I get asked about this one a lot in the live streams. Excuse me. So I feel like I look it up a lot, but yeah, truth be told, this is not a company I'm very fond of. I do think it is kind of a yield trap. I mean, just if you look at the revenue over time, it's going down as the years go on. 10 years ago, we were looking at $17.8 billion in revenue compared to $11 billion in the trailing 12 months. And this chart right here it's just not very pleasant. I mean, if we should probably just look at total revenue, right? It's just not a great trajectory. And if we scroll down, just even looking at the dividend stats, like I think they've made a couple of cuts, right? I mean, this looks like it's been going up, but we can see right here, I think it's back down again. And I thought they just cut the dividend too, just reduced the dividend. I thought I remember that happening. Maybe I'm wrong on that, but I could have sworn they reduced the dividend. Let's see. I won't spend too long looking at this, but I just want to make sure. I don't know. I don't see it, but let's go over here. This isn't great. Oh yeah, so they definitely have cut the dividend. So super high yield, obviously. Negative payout ratio means negative earnings. And let's actually jump back over to the income statement and look at their earnings per share down here, or then the net income. Let's just stay there. So, and maybe this is just the type of business. I don't really know. But since 2019, IEPs they've generated negative net income And it looks like over the last 10 years, the only years they haven't done that were 2013, 2017, or 2018. So I look at that and I don't feel, I mean, that's a huge red flag to me. Um, and all the while they've also been issuing shares. So negative net income, they've been issuing more shares as time goes on. And so with that, it's going to be harder for them to grow their earnings on a per share basis, which is your net income divided by your shares outstanding. And so over time, that dividend is just going to be getting harder and harder and harder to pay. And so I just don't think this is a great company to own. Like, sure, you're getting a 23.7% yield, but there's more than that. Oh yeah, so they did cut the dividend here. So here, let's just look at the last 3 years. So 5 years. So okay, we're going up, and we're down. Dividend was cut in half back in August. So yeah, I'm not a fan of this company. Outside of the yield, I can't see any merit to having it in the portfolio, and just the yield alone is not enough to justify the investment. Unless I'm missing something. If I'm missing something, I'd love to hear what it is, but I'm staying away from it. So, um, let's see. Okay, Ryan, it may be controversial but informative to do a video on stocks that are not SWAN, which are not sleep well at night. SWAN stands for sleep well at night. Yeah, um I'd be curious to know which stocks, when you say that, which ones do you have in mind? Because there's some that I talk about that are like, I don't think Intel's a sleep well at night stock. I don't think Jeppy's a sleep well at night stock. I don't think sometimes, like, I don't know. I think sometimes there's certain funds like, or stocks, excuse me, like Main Street Capital Corporation or Blue Owl Capital Corporation might not necessarily be considered sleep well at night stocks, at least in comparison to others like Procter and Gamble or Johnson and Johnson. And so I talk about those, but yeah, I mean, I'd be curious to know which stocks you are referring to in particular. Um, Okay, this is good. So Charles says, with the money from Intel, get 100 shares of EPD, then divide the rest between SCHD, Johnson and Johnson, and VU. That's an idea. That's certainly an idea. Move some over to the Roth, max out the Roth. Um, that might be something interesting to consider. Not, I don't know if that would max out the Roth, but that actually should get me decently close. Good idea. I'll consider that. I'll certainly consider that. Um, let's keep going here. We got just a few more minutes here in the stream tonight, guys, and I gotta wrap it up. But let's see what else we got going on here. I'm just gonna scan the chat here. So I apologize if I skip over your comment here. Um, let's see. Yeah, technically Nvidia pays a dividend. That's true. They do. That is true. They do. Camus says, Ryan, Microsoft is greater than Apple. Okay. Um, Osvaldo, do you invest all your dividends or do you have some cash earning interest? Um, no, I mean, I pretty much have it all wrapped up in dividend stocks. I've got a few grand set aside just from this sale of Intel. And I do have a high yield savings account that I contribute to every month. That's like my travel fund. So I've got a couple grand in there, but that's with Ally Bank. But yeah, most of it's just invested in securities. So let's keep going here. Yeah, okay. Thoughts on, let's see. IEP looks like a Ponzi scheme. Yes, it does. I keep hearing that. I keep hearing people refer to as that. Um, Ben says no stocks in particular, but things to look out for in terms of fundamentals. Um, I think you're referring to the sleep well at night stocks, but things to look out for in terms of fundamentals. I mean, here's the thing about that. You can't I don't know. Hopefully you guys will understand this when I say this, but you really can't spend too much time when you make videos talking about stocks. Like, let's say, for example, I'm making, this weekend I've got 3 discounted stocks for December coming out. You really can't spend too much time going through the income statement and the balance, like doing what we're doing here in the live stream. You lose people so quick, which is, I don't know, it just, I guess it is what it is. It's not a good or a bad thing. It just is what it is. You lose people so quick if you spend too much time on that stuff. And but I will try and make it a point to touch on some of these things when I can, while making sure it's relevant and not, live stream. It's a different beast because the pace is just so different. And so I don't mind going through that stuff. But in recorded videos, for better, for worse, you got to keep it a bit more surface level, or like I said, you lose people. And that's something, once again, for better, for worse, that I do try and keep in mind as I'm putting together my videos. So hopefully that's understandable, and hopefully I did an okay job explaining that. Um, invest in securities. Oh, video idea, I think, is what Ben was suggesting. Video idea. A video idea where I talk about things to look out for in terms of fundamentals. I mean, that could be fine. Like, if it's like, you know, um, know these 3 things for, like, stock research or something like that. And I did talk about that somewhat recently, actually. I put out a video on my channel. What was it? I just recently put it out. Oh, it was like foolproof way to invest in dividend stocks. Maine is totally a sleep well at night stock. It outperformed totally J&J. No, it has outperformed J&J, but I think it's less of a sleep well at night stock than something like Johnson and Johnson, or certainly something like Procter and Gamble. Um, yeah. So, but I welcome the opinion. This is just mine. So let's see. Leonardo, have you thought to reduce and concentrate a little bit your portfolio? I mean, that's kind of my plan. I mean, that's why I'm selling out. That's why I'm selling out of the 4 stocks that I talked about in that one video, or will be selling out of. It's to reduce the number of holdings a bit, be a little bit more concentrated, and I think pave the way to, in time, add more stocks that I guess are more in alignment with the where I'm at in my investing process right now. Easy says selling Intel is a mistake, in my opinion. Well, it's a good thing that what I do in my portfolio doesn't impact yours. But yeah, perhaps you may be right, and I think time will tell. I don't think there's any way to know for sure. How do you really know? You can't. So I'm just using my best judgment to make these decisions. That's all I can do. Um, Let's see. Let's keep going here. We'll go maybe 1 or 2 more. I just want to get caught up in the live chat before we excuse me, before we wrap it up. Um do do do. This is a good question. Eric, since you are thinking of selling out of AT&T and you have 100 shares, have you considered selling calls? I haven't. A couple people have told me that I should do that in the meantime, but I'm just not ready to get into options yet. So it's not something I plan on doing, but it's not a bad idea, but it's not one that I'm looking to explore. Um yeah, anyway, I'm now all caught up in the chat, guys. So, oh, Brandon here. I missed it. What are you selling? I'm selling Intel. But Brandon, you're just in time because we are about to wrap it up, my friend. But anyway, guys, 6:04. Thank you guys so much for see Dan's comment. Thank you guys so much for tuning in and hanging out with me this last hour. This was a good episode. I hope you guys enjoyed it. A few things before we wrap it up, though. Number one, if you haven't done so already and you enjoyed hanging out this last hour, you enjoyed the dividend happy hour, It'd mean the world if you gave this video, if you gave this live stream a thumbs up. Just let me know that you liked it. Let me know that you enjoyed it. In addition to that, a few other things. If you want to grab my portfolio tracking spreadsheet, link in the description. Seeking Alpha right now, 30% off that annual premium subscription. You can't beat it. There's a link in the description to that as well. But last but not least, if you guys like these, like the live chat, like interacting with other investors here, which I think is one of the best parts about doing these live streams, about having these dividend happy hours, then I think you guys should definitely join the Discord group. That's free to join. There's a link to do so in the description as well. All you got to do is click the link. It'll take you right there. And Discord's basically just one big group chat. It's basically just one big live chat. So if you're not already in the group, I know a lot of you guys actually are. But if you're not, I think you'll really enjoy it. It's a really solid community. Right now, we're up to over 26, actually approaching 2,700 investors pretty quickly. But then again, the last thing I'll plug here is the newsletter. If you guys missed it, if you didn't get it delivered to your inbox, then check it out. There's a link to the most recent article in the description. I just put it out yesterday. So I think you guys will like that one. The newsletter is always fun. And yeah, that's all I got for you guys tonight. But once again, thank you so much for tuning in and hanging out with me. Dividend Happy Hour is the best. I look forward to these every single week. So, and you guys are what makes it fun. So I truly appreciate it. But with that, hope you guys have a fantastic night. I will see you in Sunday's video. Be sure to tune into that. It's going out first thing Sunday morning. So tune in, leave me a comment, say what's up, and I'll see you in the next one.